Ladies and gentlemen of the crypto space, it's 11:31 a.m. on an October 26th. Best time of the day is here. I wait all morning for this. Good to be here. Thank you everyone for joining. Good morning. Who's in the chat real quick? Nathan's here. Erin, J-Dog, Captain Weber. Always a pleasure. The Cap's back. That's right. Yes, today's topic, Bitcoin breakout, incoming, top 24-hour gainers. So we're just going to go over the hot stuff that's going on because there's a whole lot of hotness in the Bitcoin charts. I want to take a look at the top 24-hour gainers on CoinGecko, and I'm going to be taking a look at them with you guys because I haven't looked at them this morning. I've been totally swamped this morning, so I'm just itching to take a look at them. So we're going to have just a response, and we're going to see what we feel like, what's going on with the market, and frankly, between the way the Bitcoin chart looks and the top 24-hour gainers, and then we'll take a glance at CNBC and we'll see what the headlines look like. I mean, this is just crazy. It's crazy times. This is exciting to say the least. And we're going to share it together live on the live stream. Today's episode is sponsored by Change Angel, non-custodial swap exchange. Stop depositing on exchanges. Say no to Binance. Deposit, withdrawal, in and out. Not your keys, not your crypto. That's the name of the game. Let's pop it over to the main screen. All right, this literally just ran to the computer to jump on the stream. Nothing interesting in the comments worth mentioning. I want to look at the Bitcoin chart. Oh, all right. So let's zoom out a little bit. Let's go to the 4-hour. So here's what's most interesting. If you zoom out to the daily, check this out, or even the weekly, which is pertinent for the Bitcoin chart. This is the price action right now is just a little blip. A blip of a blip of a blip. It's literally less than a week, a fraction of a candle. But we're pushing up against this green line. So check what this green line is. This green line is this previous resistance, which was, and this is the whole Bitcoin chart for the whole history of Bitcoin. Well, actually, well, the whole bubble of Bitcoin. So before this, we were down in way below the thousands. We were in the hundreds. And obviously back in between 2010, even 2015, it was fractions. It was 30, 40, $50. So you can't even see the chart. So this is just the mega bubble that ensued in 2017, 2018. So this is really like the meat and potatoes of like really digesting the technical data of Bitcoin, because you can't compare what's going on today to the early days of 2009, 10, 11, 12, up to 15 really, and here 16. This is as far back as you're going to go, having any technical data that's even remotely relevant to the a current up-to-date technical analysis. So point being, these are the two peaks that we're looking at right now. Because these are our 2019 peaks. We got to break through this, and then this was just like an entire irrational exuberance. So in my mind, I really kind of, not completely neglect these peaks. Clearly, this peak, the top peak, is our all-time high, so that's pertinent. Maybe throw one on here, like that here, this previous resistance. So those are some meaningful resistance, but those are so far away. Like a lot's going to happen between 13,000 and 17,000 that's not necessarily visible on the weekly Bitcoin chart. So I say the weekly Bitcoin chart because that's really what I'm interested in. I'm interested in the long-term trends the most. And this is the most interesting one. So this is where we are, and this is so exciting about the Bitcoin chart. I completely neglect. One second, sorry guys. I completely neglect this price action back in March. I even scribbled it out. A little scribble action. It was like, it's not even there. So look at this triangular formation. Absolutely incredible, this triangular formation that's printed since basically this candle here, which is April 1st, 2019. That's a hell of a triangular formation. This is an ascending triangle. Look at this line. Look at this support line. And the cool thing is, if you zoom in, that's somewhat of a pattern that we see here. The 15 minutes too short. But if you go to 30 minute, look at this triangular formation. So notice 1, 2, 3, 4 breaches of resistance and some serious upward trajectory, higher highs, higher lows. Well, at least higher lows is the point. That's the point of the triangular formation. You can't get to a higher high because you got the ceiling. But look at the slope on this thing, and look how it's sticking to it as support. So this is a hot time right here. This is a hot candle. I'm excited to see if we hold this support. Because if we hold this support, look how much time left we got. We got very little time left. I mean, 12 hours left in this triangular formation to really have, and this is like the tip of the tip. The odds of it getting to the tip of the tip is so slim to none. All right, let's go through some of the questions in the chat. That's the best part. Noah, your risk off strategy is BTC, but is there good logic in waiting for a fat dump to buy in? No. Fat dumps. Why? Because, so let's put it this way. You have this glorious, gorgeous Bitcoin, and you're like, what do I want to do with it? Oh, here's a good idea. I'm going to buy dollars. So by selling Bitcoin for dollars, you are in fact saying dollars are a better investment than Bitcoin. Now, maybe that's a trader's mentality. That's definitely a trader's mentality, a short-term trader's mentality. You are making a short-term bet that dollars are going to outperform Bitcoin. Because clearly, a long-term bet is Bitcoin is going to overwhelmingly outperform dollars. Um, and that's just the case. So you're considering a short-term position in the U.S. dollar versus Bitcoin. And you're welcome to. I cannot advocate and say that that is bad nor good. Personally, I despise fiat, and maybe that does have that it definitely has an emotional bias associated with it. And I would not sell my Bitcoin for dollars. I get tempted sometimes to take risks with my Bitcoin and place more of it in Celsius or BlockFi, or place more of it in DeFi. So I've recently removed my Bitcoin from DeFi because I think just I want to protect my assets and minimize my risk as much as possible. So I have a fair amount of Bitcoin not in anything, just my keys in my control. And I have a fair amount of Bitcoin earning yield from Celsius and BlockFi. And to the point where, and this is the whole point of all of this thought process, is what are you comfortable with? If you have 30, 40, 50% of your life savings in crypto, and if you and you take 30, 40, 50% of it and you put it into a relatively risky type of thing, which is DeFi, there's a fair amount of risk in DeFi. Are you comfortable with it? And in the end of the day, you have to be comfortable with your choices. If you're not, you're not going to stick with them. And you have to stick with these choices because the only choice that's going to be a real winner, the big winners, are the ones you stick with for a period of time. So if you're going to take 10%, 15%, find your comfort zone and do it. And stick with Celsius is quite impressive. Alex Mashinsky is impressive. And I don't see personally any reason that I can't take a moderate size position or not really a position that I'm buying something or taking acquiring an asset, but placing my assets in his organization's custody. So that's the risk analysis there, and I'm quite comfortable with it. Anyway, risk off strategy being Bitcoin. Relative to crypto, risk off is always Bitcoin. Relative to DeFi and altcoins and basically everything other than possibly, arguably, Ethereum, albeit Bitcoin has a very different monetary policy than Ethereum. So that is very much risk off. I don't see how that's not even considered risk off relative to Ethereum. Yes. And how do you realize gains between alt season when you're back in BTC? Uh, realize gains, well, by selling to BTC, those are realized gains. And there's a shitload of taxes to be paid. So those are all short-term capital gains, most likely, especially if you were investing in DeFi earlier this year. Anytime you sold for another Ethereum asset or to BTC, that's a taxable event, and you're going to get hit with short-term capital gains tax, which is your tax bracket, give or take 30%. And that's why I post on Twitter that this is the most ridiculous thing that's going on. That the only reason people in this country accept tax is because they don't see their money at all. It's tax withheld. There's withholdings. So when an employer is paying you, you never even see the money that was taxed. But when you make, let's say, 10 grand trading, you're expected to take $3,300 of it, give or take, and send a check to the government of the work that you did. And how the heck, I don't understand. And this is why I say the only reason the entire country doesn't get angry is because they never even see that $3,300. They made 10 grand, but when they withdrew from the exchange, they only saw 7,700 of it, or 6,666. So just a manipulation. It's such a scam. Horrible. Wintertime in Europe, so you're an hour earlier than normal, Barrett. My man, but I'm still here. That's all that matters. Yeah, I was thinking the same. Noah's too early. I'm sorry. I'm sorry. It's hard enough for me to get to this 11:30 nowadays, guys. I try my best. Mock mock. Will the government try and tax you for holding Bitcoin? No, on the contrary, the government currently does tax you for holding, well, not holding Bitcoin. Looking into the semantics of your statement, you make a valid point. It is impossible for them to tax you for holding Bitcoin, but clearly, anytime you spend Bitcoin, that's a taxable event. And my goodness, look at this candle down. All right, it's still above 13. But point being, that's why these crypto debit cards and PayPal, this is going to be some really complicated stuff. Because anytime you spend Bitcoin, you owe tax relative to the cost basis. If you bought $10 worth of Bitcoin and it's worth 25 and you spend it at a grocery store, you owe tax on $15. So you're going to owe literally $5 worth of tax. You're going to sell your Bitcoin to buy a pack of gum for 99 cents, and you're going to owe $5 worth of tax on your $15 capital gains. And everyone is so complacent with this taxation scheme in the IRS. It's so infuriating. They tax the crap out of people, and people are so accepting of it. Like, okay, I'm going to pay. No, I'm not paying 33% of my money. Hard-earned money. It's theft. Ridiculous. I cut these boys a fact check, and I'm going to complain every step of the way. Lewis said, "Hey, Lewis, always a pleasure. I know this is off topic, but do you have any thoughts with regard to NFTs, non-fungibles?" Yeah, man, I love Gods Unchained. So I was a big Magic the Gathering player when I was a kid. Never got into like Pokemon and stuff. Maybe I was a little bit before that time. But I was big Magic. Man, I remember my first deck. I had a Power 9. I had everything. Lotus, all the Moxes, Time Walk. The thing would be worth $500,000 right now if I held it. So Gods Unchained is very much, actually possibly even better from a price appreciation standpoint than Magic. Magic, the cards, you can imagine, they're paper, they're cardboard, and clearly they're worth a fortune, but Gods Unchained is global. It's NFTs on Ethereum, and it's global, meaning it's global, and there's a very restricted supply. Like if you go on the market for Gods Unchained, there's some cards that 30, 40, 50 for sale. There's going to be some serious demand exceeding supply, especially as L2s get implemented, and especially as time goes on and Ethereum gets more, people get more comfortable with Ethereum, and Gods Unchained gets more revenue, and they do advertising, and they expand and advertise in multiple countries. I mean, literally, you're talking about a planet, and there's like 10, 15 things for sale on the Gods Unchained marketplace for certain cards. So I think there's massive supply shortage, and there's massive demand because this game reminds me very much of Magic. And I believe it was built and designed by some of the original MTG, Magic the Gathering creators, and it's really good. It's really, really very enjoyable gameplay mechanic, and that's really good to see. Nice to see. What else we got going on? Igor says, "Hello, Noah. Cvault core." No interest. No interest. I'm not touching any of that. Lewis, I'm comfortable running naked down the street with Bitcoin chest paint. Yes! Yes! I'm ready to go. Let's get some orange paint and run down the street. Bitcoin. Damn right. I mean, it's just incredible what Bitcoin is. I'm so tired of the dollar. I'm so tired of fiat. I'm so tired of traditional work and employment and dependence and dependence on an employee. One second, guys. Dependence on. So what I want to do from a work perspective is work because I want to, not because I have to for monetary compensation. And that's the whole point of economic freedom and everything that I talk about, ladies and gentlemen, is that I'd probably be doing the exact same thing for work that I do now. Just the mere fact of not needing to work changes everything about the psychology of the experience. Like, if you got to get out of the office at 3 o'clock, bye guys, I'm leaving. And they're like, no, we need you. No, I'll see you tomorrow, guys. Goodbye. So it changes everything. And psychology is everything. And it's the most important thing that is often overlooked. And it changes everything when you no longer are tied down and forced to feel job insecurity and all those horrible emotions. And this has been a heck of a year for those particular types of emotions. Job insecurity when there's countless layoffs and brutal humanitarian crisis from a financial perspective, or a financially induced humanitarian crisis. I live in a relatively wealthy neighborhood in South Florida, and the Breadline, like the line for food, um, at the where they give it out, is massive. I mean, it's got to be miles, and and the whatever the funny or ironic or disturbing or just thing is, there's some very expensive cars on that line. Mercedes all over the place, and so on and so forth. There's such brands. So the point being is, uh, it's just America, man. People run on debt, and they're buying these fancy cars, and they're broke. Or maybe they're out of work. Just because you have a $100,000 Mercedes doesn't mean you can actually pay the bills and afford it. And when you see $100,000 Mercedes on a breadline, that's stark reality of frankly, what does that mean? That means cheap money. That means the debt was easy. The bank was like, all right, the risk analysis of the bank was pretty short-sighted, you think? If it was that easy for someone to take on 100 grand worth of debt and not have that little bit of job security. Just very unfortunate. It's more than unfortunate, or more than not responsible, Mak Mak. We'll go back to like uh, philosophy and psychology and emotions, and and you got to remember, we talk relatively intellectually, especially on our channel. Um, but most, and even myself, we're just animals, um, and filled with emotion. And it takes a lot of control to be able to not necessarily directly express emotion, but to apply verbiage and engage with emotion in a conversation and have it to be actually productive. To have it be productive, whoa, that's a lot to ask. Us humans and us emotions. A productive conversation about emotions. How about that? Did you buy a Just Nibble? No, not from me. You're going to want to look for Josiah. I'm sure there's always something cool coming out that Josiah could talk about. I myself know what I want to do with Digibyte. I'm not there yet. Um, and I don't think you can see much in the short term. Now, I don't even want to pull up the chart because the price action is probably getting decimated. And and this goes back to what's most important that I could say about Digibyte. I love Digibyte. I have a position, and it's a large position. I'll tell you guys right now. I have 500,000 Digibyte. I don't plan to sell it. I remember literally at the beginning of the year, I saw that at like $2,000 or $1,500. I've had this for years, guys. I think I got it for like 2 grand. But point being is, don't invest, never invest, never go all in and never spread too thin. And if I know there's a lot of folks in this room that love Digibyte, but you should not be 100% in anything. And I see that a lot on Twitter, all in. No, 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 no. You work too. This is where I go off of my rant. You work too damn hard for your money, boys and girls. No, 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 no max risk, no all in. Albeit, so bear in mind, as I say, about 80-85% Bitcoin. So I guess you'd argue that that is an almost or uh, an over position in Bitcoin. But the thing is, and what is most important about the story that I try and tell, Bitcoin fits into the global macro narrative, as best described by Raoul Pal. And everyone at this point, all the big brains, Lynn Alden, oh my God, and everyone. There's not a person. There's not a financial one. There's not one of the extremely smart financial advisors and brilliant macro thinkers that doesn't incorporate Bitcoin at this point. So, and that's just the truth, and that's why Bitcoin is different. And that's not a bad thing. That just is what it is. So what's most pertinent, as I say all the time, is when you're looking at the markets, you can't look at the markets as you want them to be. And sure, you can take a little speculative position. That's the point. That's the point of my DigiByte position. Speculatively, DigiByte might be everything that I hope it to be. But as of today, it's not what I hope it to be. This is what it is. You have to live in reality. If you don't live in reality and you live in hopes and dreams, that's how you get burned. And that's how you lose your hard-earned money and you work too damn hard to gamble your money. That's the bottom line. So I love my Digi. Have that position. But it's not going to be bigger than Bitcoin. What, it goes up 100%? It's worth a half a billion? It goes up 400%. It's worth a billion. 400%. It goes up. It goes to a 2 billion, 3 billion, 5 billion market cap. You know, there's a possibility, but now you're getting into very speculative, less likely than more likely territory. And I'm interested in not just more likely than less likely right now. I'm interested in retaining value. I'm not even interested in 20% gains. That was back in April, May, June, well, May, June, July, August. That's where it was the more likely than less likely to get a 20% rip, 20% rip. Right now, it's risk off, as Nathan said at the beginning of the stream. Risk off. Don't take those damn risks. Is KYC coming to every platform, including DEX? KYC cannot come to DEX. It's not technologically possible. Both StakeNet and BlockNet cannot have KYC no matter what. So what'll happen at some point, it's inevitable, the DEXs are going to rule everything. You can't regulate them, you can't control them, you can't do anything with them. Absolutely incredible. Well, where the devs go to jail, as you say, Nathan. So that's what. Stop playing around with centralized exchanges. You play around with non-custodial exchanges like Change Angel, and that's all you got to do. The Ren chart's getting hammered, Captain Weber. Hammered. Let's take a look. I got it right here. Oh, it's unfortunate. Lewis says, how many crypto positions is not too thin and not gold? I have Ren, Digibyte, F, Atom, and I love those assets. There's a bunch of other assets that I play around with, but that's a hell of a nice set of assets that you've chosen. Do keep in mind Dot, Atom. I have a larger position in Atom just because I got into it prior to Dot, but Dot and Atom, they're both very speculative. Ethereum, because they're not there yet. So bear in mind, Atom and Dot could be as big as Ethereum in 2 years. But that's the whole point. We have no idea. You have no idea. It's not today. So if Dot and Atom were as big as Ethereum today, and all of a sudden we had a spike in activity on Polkadot, or like a new blockchain coming out, that's the whole point. That's when you could make your 20% rips to the upside. But this isn't the time to place a large position in a speculative platform, in my opinion. It depends on your risk tolerance, and I'm very, very, very risk adverse. A small position in Digi. Ren I love. Ren for me was a very, very small position. It wasn't a big position, but Ren turned into one of the largest positions in my entire portfolio, and I can't sell it because if I sell it, I gotta pay taxes, and I'm sure as hell not giving the government taxes if I don't have to. Ha ha. Oh, Ren and Digibyte are far the largest for me. All right, Lewis, he got everyone has to live and feel comfortable with their choices. Just as I said, if you're comfortable with Bitcoin and DeFi, Bitcoin and Celsius, then you Bitcoin and BlockFi, you do it. But you have to be comfortable with your choices. That's the most important thing. And don't gamble. Don't gamble. So look, this is a bit of a scary chart actually for Ren. That's a support flip resistance. That's unfortunate to see. That doesn't make me happy. But I have no capacity nor interest to liquidate my position at all, and that's just the bottom line. Mock mock. Cash is trash. Ray Dalio said that, and I tend to agree. I have no interest in cash. I mean, listen, what's the point in cash? I'm going to take my dollars in a bank, move it into Gemini, get GUSD, and throw it into Celsius and get like 12% of my money. Well, why am I going to get garbage from a bank, a useless bank that provides useless service and useless functionality and useless everything? Banks do absolutely nothing for you. Nothing at all. They do nothing for me. I don't understand why people are so comfortable putting money in a bank that does literally nothing for them. You're literally giving your money to someone that doesn't do anything for you. So this is really why the system is so primed for change, because uh, you want to give your money to people that are going to do right by you. You want to give your money to people that are going to generate yield for you. And that's exactly what BlockFi and Celsius and Nexo and Voyager and the DeFi protocols are really foreshadowing. And not just foreshadowing, because it's actually being implemented and executed and realized in real life. This is actually what's happening. You're going to be able to take your money and make money with your money, because that's the last thing a bank is doing for you, because they're taking it from you. They're taking your fucking interest. They're taking your gains for themselves and making billions upon billions of dollars a year. So it's just not fair, and I think that I find people are so complacent that they actually do it, and I don't agree. I don't understand. I don't understand the lack of resistance to the status quo and the lack of anger and frustration and complacency. This extraordinary amount of complacency, this lack of hunger for change, and I don't understand it. It is what it is. Anyway, 11:59 a.m. on a Monday, October 26th. As always, best time of the day. Smack those thumbs up buttons. Tell everyone to subscribe. It's always a pleasure. Hit me up tomorrow. Throw some questions on Twitter. I'm going to see you tomorrow at 11:30 a.m. Eastern Time. I wish you all a wonderful day. Peace.